I don't think that the economy is in recession right now, and I don't think it's a sure thing that we're headed into a recession. But there is a narrative that could take us there, and it basically has to do with trade. These rising trade tensions create uncertainty in the economy. We've seen businesses holding back on investment, expressing concerns about the prospect for global growth. If that takes hold and President Trump keeps pushing in that direction as hard as he can, that's when you have the chance of a downturn, is that people lose confidence, they start pulling back more dramatically, and that thing starts to build on itself.
John, why don't you see that playing itself out into a downturn?
Well, the macro fundamentals are strong. GDP continues to chug along above 2% GDP growth. Unemployment rate still below 4%. The consumer data is strong. Real wage growth is near decade all-time highs. And on top of that, you don't see any big uptick in unemployment claims. And until you see something like that, I wouldn't be particularly concerned. We've seen CapEx like short recessions in the past without there being major economic downturns. We've seen that in the mid-2000s. We've seen that in the 90s as well. Now, the question is whether that's a sustained phenomenon or not. And I agree with Binny that certainly trade and global growth, I would say more so, has weighed on business investment. But I think also you have to consider the fact that President Trump and his economic team follow this closely. Earlier this week, they've discussed potentially further lowering corporate rates. And I think that if it does continue to meaningfully get worse, I couldn't think of a better policy prescription to shore up business investment, which, if you remember, in early 2018, there was a massive CapEx boom following the Tax Cuts and Jobs Act. And I think that had a lot to do with lowering the corporate rate from 35% down to 21%, where it is now.
Binya, you do want to respond to that and to the idea that if it's going to spark a broader downturn as you see it, we're likely to see the president step in with some countermeasure.
Yeah, I think that's actually a really key point because the president is actually very constrained in his ability to do anything. You know, when the president first came into office, he had a Republican Congress. He was able to push through the tax cuts he wanted. Maybe they had a positive effect for a while. But even if he wanted to do that again right now, he would need to convince congressional Democrats to go along with that plan. One has to put lower chances on his odds of doing that. It's not at all clear that this White House has the ability to respond meaningfully to a souring in the economy.
You know, as I listen to both of you, Binyamin and Mr. Hartley, I sense that, Binyamin, you are looking forward to the potential effects of tariffs on the U.S. and global economy. And, John, you seem to be focused more immediately on the numbers as they stand today and as you look backward here. Am I understanding the difference in your views? And let me ask each of you then to respond to the other. Binyamin, what do you say to John when he points out the compelling numbers that he does, though I think some would quibble whether there was really a capital spending boom in 2018? And, John, how do you respond to Binyamin, who says, hey, wait a minute, the current numbers may not be all that bad, but what may happen as a result of tariffs may indeed be? So, Ben, you go first.
So, yeah, I agree that the economy right now has a lot of things going for it. We're still seeing relatively strong growth. We're still seeing job growth. I personally don't subscribe to the view that the tax cuts made a meaningful difference, but, you know, I do think that a lot of things look pretty good right now. What I would say, however, is that I think we are starting to see signs of weakness. I think that we are starting to see consumers feeling some pain from the tariffs. And it is true, certainly, that it's only if things get worse that we end up in a recession. But where we are right now is clearly not a recession. And I agree with John that the fundamentals at the moment are not all that bad. It is a question of whether the current trajectory continues to deteriorate. That's how we end up in a bad place.
John, Binyamin kind of concedes a lot of your points. What do you say to him directly about the potential that tariffs might have to slow things down, derail what is a pretty nice picture right now?
Well, I think first and foremost, I think it's important to remember that one, you know, the president is clearly, and his economic team follows closely, and especially with an election happening next year, would hate to see a recession happen.
You
we
think?
know that there's only been two there's really been two major causes of recession in the post-war era, and that are things like financial imbalances, things like housing market collapses or tech bubbles, or Fed policy mistakes. And I don't think, potentially there's some frothiness in the corporate credit market, but it doesn't really seem to be systemic. And then on the Fed policy side of things, I think raising rates to 2.5%, where we were earlier this year, is not anything like what the Volcker Fed did in the 80s to fight inflation. And you're already seeing now the Fed is already providing some sort of accommodation, cutting rates by 25 basis points last month, and the market expects another 25 basis point cut in October, at least with a 70% chance of going to the Fed funds futures market.
Correct me if I'm wrong. I didn't in that very clear answer hear you mention tariffs at all.
Well, and I will just add to that. I do think that it's important to recognize that the president actually just delayed the latest 10% tariffs on an additional $300 billion of goods from September 1st to December 15th. So I don't think that the president is tone deaf, or his economic team is tone deaf in any way. And I think you've seen in the past that farmers that have been impacted by tariffs have received support from the president. So I don't think that right now it's fully escalated to the point where it's something that I would be too concerned about, and certainly given the election,
so I'm understanding you, and I'm looking for clarity. I'm not meaning to challenge your point. It sounds like you're saying that if the tariffs start to bite, don't worry so much, because the president and his team will take swift steps to ensure that the bite is mitigated. Am I understanding you correctly?
That's right.